It's a random Tuesday afternoon. You check your mail like you always do. Bills, junk, ads, and then you see it. An envelope from the IRS. Your heart rate spikes. You rip it open, and a check slides out. $3,000. Just like that, suddenly, you feel rich. Your brain starts racing. Drinks are on me tonight. You're texting friends. You're scrolling travel apps looking at flights to Miami. Maybe you finally grab that jacket you've been eyeing. In your mind, this isn't normal money. This is bonus money, free money, fun money. Now pause. Rewind 6 months. Another Tuesday. Another $3,000 hits your account. But this time it's your paycheck. Do you celebrate? Do you book a spontaneous trip? No. You pay rent. You cover the electric bill. You buy groceries. You act responsible. You treat it with respect. Here's the uncomfortable truth. Those two deposits are identical. Same numbers. Same purchasing power. Same green ink. The only difference is the story you told yourself about where it came from. And that story is costing you wealth. Welcome to Mindset Millionaire, where we expose the invisible mental traps keeping smart people financially stuck. If you've ever celebrated a tax refund like you won the lottery, or treated your bonus like guilt-free spending while carrying credit card debt, this message is for you. Your brain plays a trick on you called mental accounting. It creates separate buckets in your mind. One labeled, hard-earned salary. Another labeled, bonus. Another labeled, refund. Another labeled, gift. And you assign different emotional rules to each bucket. But money doesn't care about your labels. A dollar doesn't know if you earned it working overtime, received it as a refund, or found it on the sidewalk. It spends the same. It invests the same. It compounds the same. Yet you treat some dollars like soldiers and others like confetti. That's the glitch. When money feels heavy, earned through sweat and long commutes, you protect it. When it feels light, like a refund or windfall, you release it without pain. You say, I didn't have this yesterday, so if I spend it today, I'm neutral. You're not neutral. You're negative against your potential. Let's talk about that tax refund. It feels like a gift from the government. It's not. It's your money. You overpaid throughout the year. You gave the IRS an interest-free loan. They held your capital for 12 months while inflation quietly ate away at its value. Then they returned it to you with zero growth. If you lent a friend $3,000 and they paid you back a year later without interest, would you celebrate? No. You'd realize you lost opportunity. But when it's framed as a refund, you feel lucky. That's conditioning. You've been trained to view it as forced savings. If they didn't take it, I would have spent it anyway. That sentence reveals the real problem. It's not taxes. It's discipline. When you outsource discipline, you outsource wealth. Now let's go deeper. There's something gamblers call the house money effect. Imagine walking into a casino with $100. You win another $100. Now you tell yourself, I'm just playing with the house's money. You take bigger risks. You bet recklessly. Why? Because losing it doesn't feel like losing. But once it's in your hand, it's yours. Losing it is losing capital. We do the same with bonuses, refunds, inheritances, and stimulus checks. We call it extra. We call it free. We call it play money. Then we trade it for things that depreciate, gadgets, clothes, vacations, while high-interest debt quietly compounds in the background. Imagine taking that same $3,000 and wiping out part of a credit card charging 25% interest. That's a guaranteed return. Or investing it in a Roth IRA and letting compounding work for 30 years. That single decision could multiply into tens of thousands of dollars. But instead, we choose fireworks over fortresses. Mental accounting doesn't stop there. It traps you in bad decisions long after the money is gone. You buy a $100 concert ticket. On the day of the show, there's a blizzard. You don't want to go. It's dangerous. But you think, I already paid for it. I can't waste it. So you go anyway. You risk your safety and sit through a miserable night. The money was gone the moment you bought the ticket. The decision to attend should be based on today's value, not yesterday's cost. But your brain refuses to close the mental tab. The same happens with investments. A stock drops 40%. You refuse to sell because, I haven't lost until I sell. That's not strategy. That's ego. The market doesn't care about your purchase price. It cares about future performance. Then there's the credit card points trap. You earn rewards. It feels like free travel. Free perks. Free upgrades. But studies show people chasing points spend significantly more than those paying cash. You spend $1 to get 2 cents back and celebrate the 2 cents. You separated the reward from the spending in your mind. But in reality, they are linked. Points are just a small rebate on larger consumption. Now let's address something important. Fun money is not evil. Experiences matter. Joy matters. But there's a difference between intentional fun and impulsive reaction. The wealthy plan their splurges. They assign a percentage of income to lifestyle. They decide in advance. The broke wait for a check to arrive so they can finally exhale. Another common trap. People holding $10,000 in a savings account earning almost nothing while carrying $10,000 in credit card debt at 25%. They refuse to use the savings to eliminate the debt because that account is labeled emergency fund. It makes them feel safe. But mathematically, they are burning money every month. Net worth doesn't care about labels. Assets minus liabilities. That's it. So how do you break free? First, relabel windfalls immediately. When unexpected money arrives, tell yourself, I worked 80 hours for this. Attach effort to it. Visualize the grind. Make it heavy in your mind. When it feels earned, you protect it. Second, implement the 72-hour rule. When a bonus or refund hits, do nothing for 3 days. No spending, no transfers. Let the dopamine settle. Once emotion fades, logic returns. Third, adjust your system. If you consistently receive large refunds, change your withholding. Increase your monthly cash flow and automate that difference into investments. Remove the dramatic windfall moment entirely. Smooth cash flow kills impulsive decisions. Wealth isn't built in dramatic bursts. It's built in boring consistency. Stop treating your financial life like disconnected episodes. It's one continuous movie. Every dollar is a character contributing to the final outcome. Some aren't special. Some aren't extra. All of them matter. A seed found on the sidewalk grows the same tree as a seed bought at the store. Don't eat the seeds just because you found them unexpectedly. Plant them. Mental accounting is comforting because it protects your emotions. It lets you feel rich when you're not. It lets you justify waste. But real wealth requires radical honesty. A dollar is a dollar is a dollar. So here's your challenge. Look at your last tax return. Was the refund over $1,000? If so, you gave away control of your capital. Fix it. If you're expecting a bonus this year, decide today where 100% of it will go, debt elimination or investment. Make the decision before the money arrives. Be the architect of your wealth, not the victim of your instincts. If this shifted your perspective, make sure you subscribe to Mindset Millionaire, like this video, and in the comments, tell me exactly what you're doing with your next windfall. Not what you hope, not what you might, what you will, because millionaires don't treat money differently based on emotion. They treat every dollar like a worker sent to build their empire. And now it's your move.